Standard Chartered Bank is joining us on the phone line. Anant, good morning. Thanks a lot for finding time for us at what must be a busy moment in the trading desk. 64, 61, 62 as we start to trade. More lows likely?
Well, absolutely. I think there's a good chance that we see more lows. Clearly, all currencies are reacting. In fact, other currencies are probably reacting more than the rupee is. What's happened the last couple of days with the Chinese yuan can change dynamics quite a bit for all currencies. Off the lot, India is probably least impacted because unlike some other trading partners for China, which are commodity exporters to China, or who have a large weightage of Chinese yuan in their RERs, India is reasonably kind of diverse from this. At the same time, the reality is India is the most overvalued currency over the last 2 years, now that China has moved. So far it was China which was leading the pack. China is now playing catch up thanks to this particular move. And now rupee stands out as a sore thumb as the most overvalued currency amongst all major currencies. And it's a mix of good and bad. Clearly, commodity prices being low is great news for us at a macro level. At the same time, while exports won't be impacted directly, domestic industry is going to be hit by this move in Chinese yuan. We already have sectors like tires and steel, which is languishing under imports from China, and that's going to be impacted even further. So I think it will be good if the rupee reacts. Even though the capital flows are positive, it will be great if we see a bit of depreciation and a correction in the RER for the rupee level.
Okay. Anant, hi, good morning. The big debate at this point is whether China is waging a currency war or is it just merely fixing a discrepancy that it had? Which camp do you belong to?
I think it's a combination, Sonia. To start with, of course, with this IMF SDR report, there was a requirement for China to move to a more market-determined FX rate. In the past, they've been accused of having a fairly black box approach to fixing FX rates. And what they've done clearly is to alleviate some of those concerns. And, alongside, of course, they achieve a few other positive benefits. The fact that their RER was overvalued over the last couple of years. Dollar has strengthened, whereas Chinese yuan has remained stable against dollar for a while now. Their exports are down sharply, and so have their reserves. In the last 1 year, they've lost about $350 billion worth of reserves, given the sharp capital outflows. So in their context, this ticks a lot of boxes. It ticks the IMF box and helps the domestic economy and exports and correct the overvaluation. So I think it's a bit of everything. And of course, it has an impact on all currencies alongside.
Okay, so some levels, Anant. What are you looking for in terms of depreciation? A further, 5%, 4% from the yuan itself? And more importantly, rupee. Today, this week, this quarter, what kind of levels can we look at? Is 65 the big number?
On the yuan itself, Lata, it's very difficult to predict. We must remember that this is entirely in the hands of the Chinese authorities. Let's not forget that they still have 3.65 trillion worth of dollar reserves. That's amazing amount of reserves, and they can come into the spot market any point of time to control volatility there. Frankly, some market participants were surprised that we had a move in the fix today as well, in line with the spot market. But there seems to be, signs that agency banks are now there in the spot market to control further depreciation of the yuan. I think we'll have to wait and see. I would suspect that at about 6.5 levels for the Chinese yuan, you will see authorities coming in and arresting any further sharp fall in the yuan. I don't think the intent for the authorities is to see a sharp 10% type depreciation for the yuan. I don't think that's the intent at all. Now, in that light, I think for rupee, frankly, the flows don't support necessarily a very high depreciation for the rupee compared to other currencies. We are seeing knee-jerk reactions. Having said that, it will be great to see some level of depreciation for the rupee. The reality is we are overvalued in RER terms. And also there is an overhang of unhedged foreign currency exposures. So I think it's a great time for importers and people with unhedged exposures to at least buy insurance, given that the paradigm seems to be changing. And if that helps depreciate the rupee to about 65, 65.5, I think it's good news for the country.
Okay. And I just had one final question, Anant. I think, you mentioned the fact that there has been quite a bit of uncertainty. That's perhaps because not a lot of people know what the next step from the PBOC could be, whether this is just a one-time process or whether, this is a complete overhaul of the Forex regime. What's the sense that you're getting?
Look, we are in uncharted territory. Even yesterday's move was not expected, and clearly PBOC took the market by surprise. This is clearly a regime change. So the way in which they fix their CNY fix has clearly changed. The formula for that has changed. Having said that, we must caution that the spot market, which is the basis on which they actually do the fixing, is very much amenable to control by PBOC. Let's not forget PBOC has stupendous amount of reserves in its control to actually intervene as and when it requires. So we'll have to watch the space. Like I mentioned earlier, I think we shouldn't see a very large depreciation from here. I don't think the intent of the Chinese yuan or the Chinese authorities is to engineer that. Having said that, it will keep every other currency on the tenterhooks because we won't know when the next move can happen.
Yep, absolutely. Thank you very much, Anant, for giving us a perspective to look at future moves. Yes, some volatility and currency wars cannot be ruled out now, for sure. Let's get back to discussing stocks with